Good morning, everyone. Thank you very much for attending today's webinar. Um, my name is Justin, and I will be presenting today. I'm the Senior Investment Manager here at Sharewise. So we've got a very interesting topic today to discuss. I'm going to get right into it today. We're not going to waste any time waiting for those to join. Those that join late, and we'll go from there. But very interesting time in the market, and let's get into it. So I'm just going to share my screen. Perfect. So can you guys just type in the chat box just a yes, just to confirm that you can see the screen, please? That'll be great. Or a Y. Lovely. Thank you. Excellent. So today's webinar is 2025's final search, positioning for the next big market run. So obviously, I think that says a few things, right? I do believe we could still see a lot more highs come through at the moment, and we're going to go through all of that today. And ladies and gentlemen, if you have any questions, please feel free to ask away. You can ask any questions right there in the questions section, in the chat box for the webinar, and I'll go ahead and answer them at the end of the session as well, just to be clear. So the date today, the 23rd of July, 25, and just a few disclaimers very quickly. This is general advice only. Past performance is not a reliable indicator of future returns. Seek independent financial advice before investing. The information provided here today is purely for educational purposes. Okay, now that's out of the way. So I just thought I'd start off with a little bit of a client overview, to sort of showcase some fantastic results that I've gotten for some clients at the moment. And this is just one example of many that I'd show. And, the vast majority of investors are sitting around that $500,000 range, right? Some obviously a little bit more, some a little bit less. But, I think this is really pivotal to sort of showcase the type of returns that is potentially available to you if you choose to opt in to work with us, myself here at Sharewise. So as you can see, the account balance was 320, total P&L is about 142, okay? And you can see the return, even with the drawdown of the April tariff concerns, we're up about, 40% return for the period. That's impressive, right? The breakdowns of the stocks and instruments are basically categorized here as well, and you can see that there. So if you guys do want access to work with myself at the advisory side, at the end of the session, I'll be running a webinar poll, and you can basically select and opt in for those questions there, and we'll go from there. All right, so we've got a few things happening this week and this month. It's obviously earnings season. We're in that period here in the US, so we've got quite a few businesses reporting earnings, obviously, some of them large cap companies reporting this week. Obviously, Amazon on the 31st, Google on the 23rd, so not far off from that, Tesla as well on the 23rd, both on the same day. That's going to be really interesting. Okay, so that's tomorrow. Tonight after hours, right? So we'll get a good view of what happens from a perspective of the markets based on what these businesses report for earnings. And I've got a little bit of a talking point here to go through with on Tesla that I'll run through during the session too. Meta 30th, Microsoft on the 30th, and we've got Apple on the 31st. So there's quite a few that are reporting this week, okay, or in the coming 7 days, 7 or 8 days. So, a few things I wanted to go through first is we're getting into a pivotal repositioning window here in the end, well, leading into the last half of the year, okay? Jerome Powell spoke last night. If you all obviously watched or listened in to his speech, not obviously, maybe not, but the reality is he mentioned a few things that weren't too concerning at all, actually. It was quite interesting to see that he really didn't pay much attention to interest rates, which was interesting. But some main topics, obviously, which we've discussed is first and foremost, inflation is falling. Rate cuts now are on the table globally. But, that's obviously dependent upon data, obviously, and tariff concerns as well, but that is still on the table. Central banks moving from hawkish to neutral or dovish sort of stances. Um, S&P 500 and the Nasdaq are entering that breakout territory. Um, and I did mention this. If anyone attended last week's webinar as well, or the one before that, I've been calling for a breakout for all time and new highs to come in the US market. I've sort of mentioned a number of times that there are a lot of thematics right now that you want to be invested in, and clients have knocked the ball right out of the park in a lot of these recommendations that I'm going to show you as well in this webinar. This isn't a pitch, this is just the truth. So if you're not positioned well and you haven't received these style returns or similar to, you're not doing something right. You need to really look at what you're doing. Okay. So, as our presentation reads here, this is the moment to reset before Q4. So the window for, let's say getting in is really closing up on you in the right areas. So, and we need to get this done before institutional rebalancing takes place. Okay. Um, so you need to follow the flow, right? I've mentioned this many times. Smart money is moving capital. They're moving capital in areas that have a lot of upside based on fundamental and innovation, right? Fundamental reasoning with innovation, right? So the rotational themes, which I've mentioned, webinar in, webinar out, are AI, the rotation into semiconductors, cloud computing, quantum computing, amongst a wide range of other technology as well. And you know, again, if you sort of look at the macro backdrop at the moment, and I just wanted to sort of reiterate a bit about what Jerome Powell said last night, right? So he mentioned that the banking regulation is really where he was focusing on in the session yesterday. And he didn't really address monetary policy or interest rates. So, instead he focused solely on the capital frameworks for big banks. And obviously, he remains silent in some of the economic conditions like inflation. But largely, his main address was to sort of address that banking regulation side, which was interesting. And then, the market reacted quite interestingly last night. And the rotational themes that I've just brought up here did pull back a little bit, which is interesting. And so I'm not saying this is advice to go and buy them today, but, we could still see more upside. But there is still a potential of a bit of consolidation before that leg. So I'd be eyeing them out based on the moves we saw last night. Okay. For maybe another entry point for those that aren't in those positions or those sectors or those themes. And I can help you get a better entry if you want some advice on that as well. And I'm really sorry, by the way, I'm a little bit sick today, so I hope I don't sound too sick through through this session. Let's get going. He also, what we noticed last night as well is markets were, mixed essentially through some of the dovish guidance. Stocks did remain range bound as well. And some of the larger cap stocks, though, did perform very well. So this is interesting because it still leads the way for the thesis of big tech, quality companies, large caps performing well potentially during this earnings season. So we do have a positive view on that. And I'm going to take you through some of that as well. So it's important to keep a tactical approach, right? So smart money, using all of the macroeconomic backdrops we've just discussed, or incorporating that in the thesis, are still allocating capital to energy security like uranium, LNG, defense technology, in rising geopolitical concerns or tensions, amongst the other themes I've just mentioned as well, right? And some spotlights we're going to talk about today, I'm going to take you through are Tesla, Meta, Microsoft, NVIDIA, amongst a few others as well. Okay, so high conviction trades with 100% plus upside potentially, up to 100%, maybe not that much, but you never know, right? Some of these businesses could go anywhere. So some of the names which have done very well that are still looking okay, that could be worth getting into maybe after a bit of a consolidative period, Rigetti, right? RGTI, quantum computing, exposure with real institutional activity, they're changing the game here. And that's probably a space that I think a lot of investors aren't looking at, and that's something you want to really keep an eye on. APP. So AppLovin is the name of the company. Now, this isn't advice to go and buy these names again. What I'm trying to say is they're all businesses that are showing explosive potential growth. Okay. And they have consolidated a little bit. So it's interesting to see what they do in the next few days. But this is an interesting business. So they optimize app development through AI. Okay, so it could be an excellent position. Some brokers are targeting 50% upside from here still, but there could still be consolidation. So just be mindful of that. So TSLL, which I've mentioned in other webinars, is the Tesla Bull Shares ETF. SOXL is a semiconductor ETF. Both are leveraged, both are high in risk. You need to be able to tolerate volatility if you do want to buy these type of trades. Now, Tesla's reporting earnings. So this is a very high risk trade, okay? But I'm going to take you through a few things and we can have a look at that today, okay? Yeah, so some of these setups are very technically, let's say, overboard, and some of them are perfect for a potential entry, right? But at the same time, you want to pick and choose what that means. So we've got clear technical setups. There is a lot of earnings strength in some other names. And so there are some high risk to reward trades we could be taking at the moment. I'm going to take you through that shortly. But first, I just wanted to go through some of the quarterly trade performance as well. So, recently, Westgold Resources, we've done about a 15% trade in and out of. Northern Star, 15 to 20%, depending on the client. GQG, 8 to 11%. RPL, between the same. Cochlear, about the same. And there are so many others, by the way, but I just wanted to keep it short and sweet and give you some of the ones that some people know of. Rigetti, 22 to 43%, depending on when the client joined and worked with me on this position. CRISPR Therapeutics, same story, 42% roughly. NVIDIA, about 31%. SOXL, about 74%. Rocket Lab, between 30% to about 50% potential return the last quarter. Okay, so, and there are so many more. If you're not getting into these positions that give you these results, you're not investing correctly. You're not trading correctly. End of story. You need to reassess what you're doing. Act now or miss the rebound. We've got opportunity cost of waiting. And, I've mentioned this to so many clients that talk to me day in, day out, or prospects that, show interest in the market, yet they take no action. They hold on to losers. They don't know why they're holding them. They're just hoping that they recover. And it's just the wrong thing to do. It's the wrong thing to do. I'll put it this way. If you're someone that has a portfolio where you've got, let's say, a few positions that are down over 40%, let's say, or 30% or more, right? Let's call it that as a generic blanket percentage figure. And you don't know why they're down, or you're hoping that they recover. If I gave you $400,000 today, or $500,000 today, would you go and buy these stocks? If you're looking at your portfolio and you're saying, I don't know if I'll buy that, I don't know if I'll buy that, I don't know if I'll buy that. Well, I think it's fair to say that you need to do something about your positions, right? So I say this all the time. It's important to get an assessment of what you're doing at least, not just sit and hope, and pray for the best, right? It's just not the right thing to do. You need to take action. That's the opportunity cost, because if you don't take action and it gets worse, what do you do if it drops another 20%? What do you do, right? So holding losers, it ties up capital in dead weight, okay? It's like trying to catch a falling knife. You're just going to cut yourself. You need to take action. Institutional reallocation is fast and decisive, and that's why institutions make money. Those that are late, laggards, they're punished. period. So, don't get caught up in the red. Don't get caught up in the poor decisions that have been made. Act on making them right. Okay? And this is what I say to my clients all the time. A part of my job isn't just giving trade recommendations, it's helping with psychology around investing to help you continue to do the right thing. Because if you've got 4 positions in your portfolio that are down more than 30% or 20% or more, right? Or even, let's call it 15% or more, right? But I'm being a bit dramatic with the percentages here, just because I've noticed that there is a lot of them out there in client portfolios. But let's say that you do, right? Let's say that you got 15% or more down in more than 4 positions in your portfolio. What's to say that the next time you reallocate into other businesses, that when that happens, you're going to continue to get in the same recurring cycle? If you get that over more than one opportunity that you're entering over time, your opportunity cost continues to reduce. You continue to lose your momentum in quality investment opportunities. There's a saying that says, cut your losers and hold on to your winners. Sometimes that's the truest thing you can do as an investor. But also, you need to sort of have a bit of a middle ground, right? It doesn't just mean you let something run all the way for 10 years. It doesn't always work like that. But, you need to work within the realms of what the market's doing and telling you, and price action. And that's where I come in with my investors, right? And my traders, my investors that want to outperform. Okay. So yeah, so thank you for that. That's a true statement there, Pete. So yeah, I had a web attendee just now mentioned that institutions almost match index performance because they get access to heavily discounted placements retail punters cannot get into, not because instos are better traders. That's definitely true. That's not what I basically am saying though, right? Placements is something completely different to looking at an investment opportunity that's already listed. But that being said, there are institutions that I would say have good trading metrics at the end of the day, right? Otherwise, they wouldn't be doing what they're doing. But that being said, you know, if you do want pre-IPO opportunities and IPOs and corporate investment, let's say, opportunities in general, we can obviously allocate some opportunities as well. By the way, just on that point. So if anyone is interested in that, we can discuss that after the webinar as well. But I do agree to an extent there. But yeah, lovely. So let's move on there. So, you know, yeah, I think it's important to get yourself checked in terms of your portfolio. Investors need a professional to sort of move with confidence into the next cycle before it is too late. If you're not getting these style returns, you're not invested in these themes, you really need to get the portfolio reassembled potentially. Okay. Now, another thing I'll quickly mention, which I didn't mention yet, but I mentioned in a um, a previous webinar, Ethereum and Bitcoin have gotten a significant bit. If anyone attended my webinar the other day, I did discuss Ethereum and Solana. And, if you have a look at what they've done right now, you should be all able to see my screen again, guys, the trading screen. Can you please just confirm that? My apology. Can you see that? Just a Y or a yes? Yep, lovely. Alrighty. So, yeah, so if anybody attended my webinar the other week, I did mention that if we break out of 2,800 or 3,000 points, we could very easily get to 4,000 in Ethereum. Bitcoin, I mean, that looks interesting. Now, this is not advice to go and buy these cryptocurrencies, but we've got a lot of potential opportunities we could look at for cryptocurrency on the exchange, on the ASX, and internationally as well, to give you that exposure. Okay, so that's something to really take into account maybe as well. All right, so let's just go through a couple of those stocks. So obviously Tesla, that's reporting. Now I'm a bit of a contrarian with Tesla. A lot of people are saying I wouldn't want to touch it because of Elon Musk, um, you know, etc., etc., etc. However, what a lot of people continue to miss is Tesla is no longer just a car manufacturer. They are in AI and robotics and energy, and we do believe that long term they could do extremely well. Okay, so I think it's going to be interesting to see what they report. Obviously, there is a high level of risk, but we've got a lot of metrics here suggesting that we could get a breakout. Okay, you've heard it here today, and I am a bit contrarian. We could obviously a big drawdown, that's for sure, but you could also get a massive move after today's session. So I think we're at a turning point here, potentially for Tesla, turning either downside or upside. But it's going to be an interesting one, and we could obviously see you know a big pullback if they completely let's say underperform in what they have to present in terms of earnings estimates or revenues or guidance, right? So it'll be interesting to see. But the reality is some other fund managers and analysts like Tom Lee, very well known from FundStrat, he's also calling for maybe a $500 plus Tesla price target, I believe. So that's interesting. I don't know about that in the near term, but at the same time, I do believe that this could do very well. Now, this isn't advice to go and buy it today, but obviously just keep in mind that they are reporting earnings. They'll be reporting after the market closes. Okay? So interesting one to look at. Now, you can see with Tesla, the reason why it looks interesting here is because we've seen a significant sell-off already. And if you've watched my webinars in the past, I've mentioned structure, right? Higher high, higher low, higher high. Consolidation, consolidation, and then lower low, higher, lower high, lower low. Consolidation, higher high, higher low, higher high, higher low, consolidation. And then this is the potential where we either draw down a lot more or we go higher, right? So I guess the results and the guidance is going to really be key today. So at the end of the day, long term, I think this could still do very well. All right. But there will be some volatility. Be mindful. Some investors are more inclined to wait for the result and then take a position. That might be wise or not. Obviously, it might be best to wait as well. But it could also be worth buying before, right? So the point is, let's see how it reports. And it could really outperform though. All right. Apple, let's take a look at Apple right now. That's shaping up really nicely. It is reporting on the 31st of July. Okay, so let's see how that reports. That's also reporting after hours. Okay, so again, still got everything drawn up here. You can see we've got some significant liquidity here, purchasing up the stock. If it breaks past 225, this could move significantly higher. Okay, looking really interesting. So let's take a look at Google. Google obviously reporting again after hours again as well today. So obviously we'll know the results tomorrow, but trend is looking excellent. Nice liquidity, a lot of buy volume here around this 174 range. If we break out here, who knows, could go a lot higher. But that'll be interesting to see as well. So this is clearly respected a nice uptrend. Looks very strong. Obviously, if it doesn't report well, we could still see a pullback. The first level of support will be around this range, in and around the 176 to 171 level will be a main area of support. Okay, so if it gets bid up here, we could see a continuation. If it doesn't, we could see a pullback closer to 154. Okay. So that'll be interesting to see. Another one which I'd like to take a look at is obviously Nvidia, right? And some of its competitors or peers. So it's really respecting this trend, still in an uptrend. Obviously, we want it to respect this uptrend as well. Otherwise, we could see an invalidation of trend, and potentially price action will give us an indication that we could see another stop at 155 before it cycle to the upside again, right? So I'd be watching this very carefully. AMD, and so one of NVIDIA's peers, you can see yesterday sold off and then got bought up. So this is interesting, really interesting for AMD. We could see this still continue to move from what I'm seeing here. Um, so one, two touch points, obviously respecting the trend at the moment. The next level of high liquidity is obviously 124. So, I think at the moment, the general sort of thesis here is it's very risky to buy. It's reporting earnings on the 5th of August. So there's still a bit of time, but very risky trade still. Okay. Semiconductors, obviously. So, it's a peer to NVIDIA. Obviously, nowhere near the market share of NVIDIA, but there is still a lot of potential for more upside as well. Some have said that it's reached its target, but if you look at the previous highs, I mean, if they report well, it could easily go back to $200 a share, given the fact that it's still trending well as well. So this will be an interesting one to keep an eye on as well. Okay. Just be mindful. Again, you don't want it to disrespect this trend. So this will either be the point of which you enter a position, or you sort of wait to see it draw down a lot more before entering, if you do want to take a position anyway, right? But this is not advice to go and buy today, just a bit of a thesis on the technical setup here as well. But we've already got clients that have done very well on AMDL, which was the ETF that tracks AMD. Some have bought between $5 and $8 roughly, and we're up significantly on the position. So, very interesting bar though, that we saw last night. So it could still move. Who knows, right? Lovely. So I'll just go back to my other screen. Perfect. So here we are. Okay, sorry. So we should be able to see that now. I don't know why it doesn't give me that confirmation. All right. So at the end of the day, you want to be making sure you're positioned well for the end of the year. And I think at the moment there is a lot of opportunity cost out there that clients are basically sitting in positions they shouldn't be and haven't done anything about it for too long. We need to look at that. Earnings season is going to be an interesting one, right? So obviously, I thought I'd just run by a few reasons why you should consider joining to work with me. Firstly, years of experience advising investors through crisis, COVID, inflation, quantitative tightening cycles. Obviously, recently the tariffs as well. Managed multi-million-dollar portfolios across all these cycles. Proprietary strategies with real trade recommendations. So members will get exclusive trade alerts as well, macro research, and direct access to private, one-on-one conversations as well. And obviously, this is not for the general public. This is for those that really want to take their, let's say, management of the portfolio seriously. Okay. So minimum investment's about $100,000, but obviously $750,000 plus is ideal. Okay. That way we can obviously effectively strategize the portfolio according to all the thematics, the income diversity, through to high growth or even range traded opportunities, right? So it ensures that the strategies can be effectively deployed at the moment. That's why we would suggest more than 750 is ideal. So this is ideal for investors or individuals managing personal wealth, SMSFs, family trusts, transitioning from passive strategies only to incorporating a bit more of an active approach too. Now you can still do both, right? We can still be passive and active depending on the instrument we allocate, right? So what you get, weekly trade setups across equities, commodities, and obviously model portfolios for income trading, regular live sessions, ongoing email, SMS alerts, high probability moves. It's not a subscription. This is an exclusive membership. Okay. So we've got limited spots. The reason why we have limited spots is because each investor we treat with a lot of care. So we have to take time to strategize and position with general advice on what we're doing, setting up accounts and everything else. So please, if you want to apply, let me know. We'll talk after the meeting. I'm going to also launch a bit of a poll here for you guys. And please feel free to answer while I continue as well. So essentially, we'll be doing regular strategy sessions. We will do one-on-one reviews. We will do trade execution recommendations as well. So I will go through different recommendations, why we like them, opportunities in the market in the US and domestic equities as well. We'll also run through opportunities that are based on, let's say, growth strategies, high income, high yield strategies as well, ETF strategies, amongst a wide range of others. So we don't always just go for a direct aggressive approach, right? We also go with an approach that's tailored towards being diversified. But obviously, at the end of the day, it'll come down to what you would rather do, right? So this is only general advice, but from that perspective, we still get some fantastic results for clients. Okay. So those are my details there. You can save my number. You can send me an email. We're located in Milson's Point as well. If anyone lives in Sydney, more than welcome to come in, meet and greet, have a one-on-one presentation as well. We could have a conversation about that. But you want to get started ASAP before the end of July, right? Because by the time this earnings period is over, everyone's going to be set up for success. So the quicker we can get this done, the better. And I guess I'll leave here with a final sort of opportunity for anyone to ask any questions. Is there any questions out there that anybody wants to ask before I sort of end this poll as well? No? All right, lovely. Well, thank you everybody for attending today's session. It's been a pleasure speaking with all of you, and look, happy investing. If you do want help with the market, reach out. Happy to work with you. Hope to hear from you soon. Take care. Thank you.